So to help us understand what's happening with rates this week, we're going to talk to BestCashCow's Sol Nasisi. Sol, thanks so much for joining us.
Hi, thanks, Lynn.
So what do you recommend for people looking to open these type of deposit accounts?
Well, I think that people should really think about what they want to do with their money and how long they want to invest it in a bank. If they have a very short-term horizon, then a savings and money market account is the appropriate way to go. If they have a longer-term horizon, 3 to 5 years, then a certificate of deposit might be the right way to go. And that's with their very safe money. I mean, right now, as you mentioned, CD and savings rates are at all-time historic lows. And so it's not necessarily the best place to put money, but if you have a chunk of money and you need a safe place to put it, then those are the two options that you have.
Okay. And as a saver, what do you need to look out for when you're putting your money away?
Well, I think first of all, you should make sure that the bank that you invest in is FDIC insured. And all the banks that we list on BestCashCow are. You should make sure that the banks have good ratings for safety and soundness. We list that also. And you also should take a look at the rate that you're getting and make sure that it's the highest possible rate. All of these banks, or most of the banks, are FDIC insured, and so they're all safe from the standpoint that the government is backing them. You might as well get the most rate that you can get out of the bank. And the rates do vary. Some banks might offer 50 basis points, which is 0.5%, and other banks might offer 2%. And so just by changing the bank that you deposit your money in, you can gain an extra 1.5% per year.
Okay. And why should people shop around for the best rates?
Exactly like I said, there are a wide variety of rates from different banks. You might have a one-year CD at one bank at 1%. You might have a one-year CD at another bank at 2%. And a certificate of deposit is pretty much a commodity. It's the same from bank to bank. The FDIC backs them up, and so they're all pretty safe and secure. And it's just a matter of, do you want the 2% or the 1%? There are some variations. Some banks are more convenient to get to. If you don't like the bank online, you can walk in and then maybe you give up some rate to do that. Other banks have better online application processes, and so that's something to consider. But for the most part, I would certainly encourage people to look at rate.
Okay. Well, how does BestCashCow.com measure what the best rates are for deposit accounts?
So we go through and we list all the best rates from the top banks in the United States, or the top yielding banks in the United States, and we just monitor it on a daily basis. We update them frequently, and we make sure that we list the best rates. In addition to that, we list, as I said, a rating for their safety and soundness, how safe the banks are, and we also provide a place where users can comment on their experiences with the bank. So if an account is hard to open, if people have had bad experiences or good experiences, we like to let people comment on that. Sometimes they share some of the tips and the tricks for getting the right rate or the best rate, and it's really about users helping other users.
I see. Can these ratios or measurements provide any clues for the state of the market in 2010?
Well, one of the things that we started to do is we tracked what we call our savings and CD ratio. And if you're familiar with the Treasury yield curve, it's something similar to that. So the Treasury yield curve tracks the yields on Treasuries all the way from Treasury notes, 3-month Treasuries, all the way to 30-year Treasury notes. And we do something similar. It's not quite as complex, but we call it our deposit ratio. And it tracks the difference in interest rates between our average savings account rate, as listed on the BestCashCow rate tables, as well as our 3-year certificate of deposit. And the basic thought behind that is a savings rate should pay less, a long-term CD should pay more, but people need to pay more to lock their money in for a longer period of time. And we'll see what kind of curve develops. And what we've seen lately is that the curve has gotten, not the curve, but the ratio has gotten higher. That means that the 3D CD rate is paying much more than the savings rate. And this kind of mirrors what's happening in the markets. Long-term rates are starting to rise, even as short-term rates stay flat. And short-term rates are staying flat because the Federal Reserve has set the Fed funds rate at between 0 and 25 basis points, 0.25%. So that has set the floor on short-term rates, but long-term rates are starting to go up. People are worried about the deficit. They're worried about the Fed and the Fed stopping its purchase of treasuries and mortgage-backed securities. So there are a lot of things that are happening in the market, and some of those, we think, are reflected in this ratio.
Okay. Well, Sol, thanks. And thanks so much for watching. For more information on deposit accounts, please go to bestcashcow.com. Thanks so much for joining us. Have a great day.